Good afternoon, everybody. Welcome back to Market Insights with Linux, and welcome to a new market update today, the 13th of May. We just had some relatively major news, or at least the outcome of the news I think is relevant. So we'll talk about that, and then we'll take a look at the markets in general. All right. So I have the S&P 500 chart here on my screen. Nice and green candle to open today, possibly also after the news, and we'll talk a little bit more about the monetary policy of the US and what our expectations are right now, and if that can change in the next couple of weeks. My prediction would be yes, all right, because at this point of time, just to start this video, we are expecting no rate cuts until September, all right? So we have a meeting in June, we have a meeting at the end of July. At this point of time, it's the highest probability is that we do not get a rate cut there, even though the news that we have, and we'll talk about that first. Then we'll take a look at the S&P 500, all right? So we'll talk about, all right, well, what can we expect from the stock market in general? And then I also wanted to talk about NVDA real quick, because we've seen another de-escalation in the trade war between China and the US. Not as major as the de-escalation we had over the course of the weekend, of course, but earlier today we heard that the US slashed de minimis tariffs on small China parcels to 54%. Still quite high, still probably going to be a major pain in the ass for those affected, but it is a de-escalation. All right, and in general, if we're looking at the markets here, before we talk about the data we had today, the volatility index has been on a massive downtrend, especially over the course of this week, and it's nearing levels of February and possibly even the start of December right here. So that's good news in general for the markets, and that obviously also helps with the bullish momentum. However, the news that we got today is inflation rate and CPI data, and that data across the board, except for the core inflation rate year on year, was lower than expected. All right, and that is well, at some point of time, you would say we're going to see some sort of an effect by the tariffs. I would say that would already be right now, and we haven't really seen that so far. So that's already good news, all right, because there was a bit of a fear, at least from some corners of the financial world, that the tariffs would cause inflation, and historically that has also been the case sometimes, but this is proof that at least for now that hasn't happened, and outside of that it's lower than expected. And if you take a look at the inflation rate year on year here, it's 2.3%, which is getting very close to that 2% benchmark by the Federal Reserve, even though the interest rate at this point of time is still at 4.5, right? And as you can see right here, if we take a look at the CME group FedWatch, where you can see the probabilities for the rate in the next Federal Reserve meeting, you can see that for June we still have a 92% probability that the rates will not be cut, and then for July we have a 61% probability, aka the highest. All right, so therefore I would say, like, especially also given the de-escalation of China and the US, in combination with the data we're getting right now, both from employment data, which matters to a lesser extent, and real inflation rate data, I would say this is a bit of an overreaction, right? And if we're almost at that benchmark already, which obviously one data reading is not enough, but if we're almost there already, why should the interest rates still be at 4.5%? I would say that's a bit high, all right? So over the course of the next month, that's going to be pretty interesting to watch. Thursday, we also have a speech by Jerome Powell, so there I will personally watch that. I think that's going to be quite important, or at least it could be very important for the markets. But in general, it's the news we had is already bullish. The de-escalation has been bullish on the higher time frames. The S&P 500, in my eyes at least, has been definitively able to reclaim this support level right here, between 5,770 all the way down to 5,600. 650, my apologies. And I don't really see any reason, except for if we have a major escalation in the trade war again, for us to drop down below that. Now, obviously, on Thursday, we have peace talks between Russia and Ukraine. If we get no result, or if we get a de-escalation after that, what I do see as a possibility then is that we fill this gap we've left since the weekend, right? So that is a possibility, but ultimately, I don't think the market really expects much from Thursday. I think it expects something, so therefore escalation could push prices down, but for now, especially that level around 5,650, I think is going to be strong enough to hold up the prices, and I think we can actually rally back up to the previous highs right here towards 6,000. Those are my thoughts. Now, NVIDIA, obviously very, very impacted by the tariffs, has been incredibly strong, has been able to reclaim this level here at 120 and 115, which was the previous resistance level last week. I trust this breakout, all right? We're heading for this level right here between 130 and 135. I do expect resistance there, but ultimately this is a great sign for NVIDIA, and I expect at least stability right here between 115 and 130, but ultimately I also do think, in line with what I expect from the S&P 500, that this can get back up to those previous highs at 145 and 150. But more on that later. I might make a specific update on NVIDIA at some point of time, but for now I think that's what you need to know regarding the financial markets today. If you do have any questions, make sure to ask me down in the comments or join the Telegram channel we have for free. Everything, daily updates in there. But for now, take care. I'll see you all in my next videos, and bye.